The Consumers Federation of Kenya, Airtel Kenya, Telcom Kenya have joined a case in which Safaricom has petitioned the tribunal to block the sector regulator's decision to cut mobile termination rates to 12 cents per minute from the current 99 per minute. Now, mobile termination rates are charges levied by mobile service providers on other telecommunications service providers for terminating calls on their networks. Airtel and Telcom have earlier criticized Safaricom for seeking to scuttle the recently announced reduction in MTR, accusing the leading telco of only being interested in protecting its revenues from rivals. All right, joining us from Stockholm in Sweden is Erick Mokaya, who's the founder of Mwango Capital. Erick, good morning to you. Thank you so much for joining us. Let's start with the telecommunications sector. This tug of war for the mobile termination rates. Well, is it fair to say Safaricom is being ganged up on? How do you see it?
I think Safaricom is just, is being seen more as a dominant player. I think time that the other companies which are kind of struggling to get the profits at the same level as Safaricom, I think they're trying to have Safaricom reduce some of the termination rates so that they can be able to compete on a fair or an equal platform. If you look at Safaricom's numbers from the last financial year, they have an EBITDA of around 50%. Compare that to Airtel, which posted something like if I remember correctly, operating profit of around 1.2 billion versus revenues around 26. So it shows you how different these two companies are. In that sense, also Safaricom has a market share around 70% plus, which hasn't changed in the last 10 years, despite Airtel trying all it could. So I think the last frontier for this battle is mostly the termination. You can't accuse Safaricom of trying to protect their revenues. They want people to stay within their platform. They want to make sure that calls within Safaricom are cheaper than you calling outside Safaricom. They want to make sure that if Airtel, they raise the numbers, they raise the fee that they charge you. So I think it's in their interest to actually have these higher mobile termination rates, and it's also in the interest of Airtel and maybe the Communication Authority to have them a little bit lower. So it's going to be quite a tug of war going forward on this end. My take would be that I think the two will come to agree on the middle ground, somewhere between the numbers that Safaricom currently has and to what numbers that the CAK wants at the end of the day. When reading the circular by the authority, I thought they had the agreement of Safaricom. So I was a bit surprised that Safaricom actually came later to actually say that they do not agree with the reduction in MTR rates. So we wait to see what happens in this regard.
All right, and look, I think Safaricom's stock was up about, it ended the year about 13% on the Nairobi Stock Exchange for 2021. So look, even on equities, is it a victim of its own success? Is that what we're seeing here?
Safaricom is big, but still growing growing really well. If you look at the revenue may have like a little bit stagnated in the last couple of years, especially as voice kind of reaches its saturation point, and now they're more trying to get revenues from data and from mobile money transfer, which was hit in the first half of last year when the government reduced. When the pandemic hit and the government reduced some of the charges to almost zero. So I would bet Safaricom is doing well generally. Maybe one of the areas that they remain to do a little bit of value addition is maybe spinning off M-Pesa, and that's what some of the owners are trying to advocate for. But I wouldn't bet against Safaricom retaining its market dominance, barring maybe a major regulation trying to push Safaricom to maybe spin off or to reduce some of the rates that it's charging. But at the end of the day, people really are satisfied mostly with Safaricom. My bet is that it's been 12 years of Airtel trying to, previously called Zain and previously called by other names, but still they haven't managed to wrestle this from Safaricom. There's something Safaricom is doing right. And even now they're trying to make headway into Ethiopia. It's not going so well so far, but I would suppose that it's part of trying to expand revenues and make sure that the revenues grow beyond what they are currently. So I think I wouldn't bet against Safaricom myself.
All right, and Eric, I'm glad you mentioned spinning off the mobile unit because Airtel's looking at doing that. I think MTN and other telcos. What's your view of the overall the telco sector for Africa? Are you bullish on its growth going forward?
I mean, in terms of voice, I think we kind of hitting peak, and I think if you look at the mature markets, if you look at even Sweden, mobile money companies don't make money from voice anymore. Voice is actually almost free. They give you to almost free. The money they're making from is usually data. You using data bundles from them. I think that's where the money is at. And may the future, at least for African mobile telecom companies, is mostly mobile money transfer. So spinning off and still retaining majority ownership in some of these mobile money transfer companies, and maybe making money from generally spinning off and making sure that these are fintech, and then they get fintech valuations. So look at it this way: like Safaricom itself, when M-Pesa is within Safaricom, people assign M-Pesa the multiple of Safaricom. But when M-Pesa is spun off and then it's able to compete with the likes of, say, some of these fintechs flat away from Nigeria and all, then it's able to be assigned that kind of a multiple, which is very high currently. So I would say that speeding off makes a little bit of sense, and if Safaricom can also retain a little bit of ownership in that, can actually boost the valuation of the entire company in that regard. So I think the future lies mostly in also them investing in mobile money transfer, them becoming more fintech players. I don't think there's money to be made in voice, as can be seen at least in the mature markets.
Great stuff. Eric, I'm spending way too much time on telcos. It excites me. I want to ask you about banks, what banks think about this. Well, let's leave it alone. We got more to talk about. Kenya's third quarter 2021 trade deficit with Tanzania. How do you see that? Is that an outcome of better diplomatic relations between both countries? How's that coming about?
So I think for the past couple of years, we've been following the East African political playground. It's been slightly antagonistic between Kenya and Tanzania, and Kenya and Uganda. But ever since the new president came into Tanzania last year, I think she's very keen on developing really good diplomatic relations. She's been to Kenya. She's invited our president to Tanzania also. So I think she's very clear that she wants to make good relations with the neighbors as much as possible. So I think that's played very well into some of what we've seen in Q3, especially in January to September last year. The trade deficit, Kenya moved from a trade deficit from a trade surplus to a trade deficit with Tanzania. So it's something small, but it shows you the ambition that Tanzania has, but it also shows you the capacity that Tanzania has in terms of if it pulls all its Kenya as one of the biggest economies in East Africa. So a friend of mine was in Tanzania recently, and he tells me that they're really growing. I think the other day I saw that they have a plan of putting up a railway line of around 1,600 kilometers at a very high cost of around $5 billion. So I think the investment is very heavy, and they're really, really keen on growing. So when it comes to reliance, Kenya is having a challenge in terms of food production, at least this past year. And this year also we have very low rainfall. I think it's dry conditions currently in January, and there is suspicion that we may have to import a lot more food. And where does most of this food come from? It would most likely come from Tanzania. So I think going forward, we actually may need to lean a little bit more on Tanzania, and especially as we continue to have some issues with Uganda presently. So I'd bet that Tanzania is on a really good path. The president is charting a really good path forward. She is very keen on building a team that is able to help her win the 2025 elections. So I think she wants to make sure she has a strong track record to show before that election. So I wouldn't bet against the same way I wouldn't bet against Safaricom. I wouldn't bet against Tanzania currently.
Great stuff. I want to ask you about Kenyan manufacturers apparently complaining about discriminative duties and non-tariff barriers imposed on their exports to Tanzania. Is there a case to be made there?
I think though, like I haven't read too much into that, but I would say that I think like anything that has been wrong, especially in the past couple of years, would be they're on a path to correct some of the mistakes that maybe the previous regime made in relation to their relations with Kenya. So I think going forward, I wouldn't expect that to be a major issue. But Tanzania is really keen on becoming a key player in the East African community and the East African markets. And I think with the addition of DRC now to the East African community, they have a big market. I mean, Tanzania has almost close to 80 million people there. I think that's a strong economy that can actually grow very fast, and a big almost 2x the market of Kenya for anyone who's there. So something else that I noticed in Tanzania this past week was also that they have a new system that is coming into place next month from the central bank, that it will allow all users in Tanzania to actually, all mobile or digital service users in financial digital service users in Tanzania, to actually be on one platform. It's kind of creating kind of like a super app, and it's in operation from next month. It tells you that they're really ambitious, and of course it's one of the central banks which is also open to actually exploring how cryptocurrency can actually be used in the economy. So I mean, all in all, Tanzania seems to be on a good path. And something else also, that, remember, this year is Kenya's election year. In addition, in election years, things tend, in terms of business, tend to scale down a little bit, worry some of what will happen around elections in August. And Tanzania doesn't have the same issue this year. So I think then, I mean, I would expect this year again, Kenya to actually to have another trade deficit with Tanzania.
Interesting. Thank you so much. Yeah, Uhuru Kenyatta was promising Kenyans lower electricity prices in December. So I think it makes sense now with the elections coming up. Promises always pop up. Overall, Erick, how would you view economic activity within the East African region? I guess sounds like it's healthy.
Yeah, I think it's very healthy so far. The countries are both growing. They're investing heavily in. I mean, there is a real line being invested in Tanzania. I would say Tanzania also has a lower debt to GDP ratio than Kenya. Kenya, I think, going forward will have some issues with debt. They've taken up a lot of debt. I think they are around 9 trillion now in debt, Kenya shillings in debt. So I think that raises a lot of issues going forward. Uganda, I haven't read too much into them, but they seem okay. They seem to be handling the COVID situation pretty well. I think they have a partnership with Tanzania to build a pipeline, which is set to kind of bypass the Kenyan side. So I think generally the three countries are doing well. I think if you go across now, Eastern Africa is where maybe some issues are, in Ethiopia to do with the war. Somalia has elections this year also. Rwanda is pretty stable, nothing much going on there. Handling, I think they've managed to reach the 40%. They had managed to reach 40% vaccination rates by the end of last year, which is pretty decent, given most other countries are not yet there. So I think the main challenge is just COVID, elections, and maybe a little bit of political tension between Kenya and Uganda. All in all, the East African region is doing well.
Thank you for that. Thank you. Yeah, go ahead.
Something I would add, maybe that came in through this morning, and maybe you haven't seen it, is there's a local company, Uzi, a company. It's just posted a profit warning for the year. It says that avocado production, I think they had to scale down avocado production, and also like globally there's an oversupply of avocados. So I think they're having a tough year. They had a tough 2021. I think it's the first company I've seen that has issued a profit warning for the last financial year. In the last financial year, we had previous financial year before that, we had around 10 to 20 companies issuing profit warnings, and this is a new financial year. So I think that's kind of sets the pace for the rest of the year in terms of maybe a few companies may actually have a big challenge in terms of meeting the profit that they had set the previous year. So I think that's something that you can note. It's a small note at the end, footnote.
A very good footnote, very informative. Thank you for that, Erick. Kenyan vehicles, this bill seeking for inspection for vehicles over 4 years. Well, what do you make of that development and the rationale?
Again, I think coming back, it's an election year. I think there's a lot of ambition. It's an election year, first of all. And secondly, we have a very high revenue targets. We have a huge deficit in terms of what we need to plug into the kind of expenses that goes on in an election year. So I think because of that, I mean, there are lots of initiatives to raise revenues, and I think this is one of them. I think there are, I read that there are around 17 inspection stations in the country. So I think this bill allows the regulator to actually get some local, or at least to get some private companies to actually do the inspection. So that's a bit worrisome in the sense that why do you need more inspections? If it's most cars in the country are more than 4 years old, I would bet. So I think just creating a new inspection is just, I don't know, it doesn't make sense in an election year. But let's see what comes of it. I don't think that, from what I've seen, a lot of the people I've talked to, they're of the idea that this is more about raising revenues and money for an election year more than an issue to do with safety of the cars themselves that are involved.
Great stuff. Erick Mokaya, founder of Mwango Capital over in Stockholm. Thank you so much for talking to us about the East African economy. Appreciate your insights as always, Erick.